Okay, hello everyone, and just welcome to Trader's Talk. The purpose of Trader's Talk is to give you the truth of trading by interviewing top traders who trade for real and give you different ways to trade the markets for consistent performance. Today's speaker on Trader's Talk is Russell Rhoads. Russell Rhoads is a highly regarded strategist, educator, and consultant. Among other things, he's perhaps best known as the author of Trading VIX Derivatives, the textbook in the space. Russell spent a decade at Cboe, including a stint as Director of Education at the Cboe Options Institute. He has a 25-year career, which includes buy-side firms such as Balyasny Asset Management, Caldwell Orkin, and Millennium Management. In addition to his duties at EQDerivatives, Russell is a clinical professor of finance at Loyola University in Chicago. Russell, it's such a pleasure to have you on board on today's Traders Talk.
Oh, I'm very happy to be here. I appreciate you altering your time a little bit for me as well.
No problems at all. It's the least we can do to have you on board. Just before we get into the real in-depth questions on the trading side of things, just a little bit background of you so that the audience can know a little bit about you. So tell us, how did you get into the whole world of trading? How old were you when you first started?
The interest really did start to peak in college as I really gravitated an awful lot toward finance classes. And I went to University of Memphis, which was, I'm so old, it was actually called Memphis State back then. And I knew that I wanted to do something in the financial space, but we had a family friend, probably my mother's best friend's son, had worked his way into being a bean option trader on the floor of the Chicago Board of Trade. So back in, goodness gracious, I want to say maybe 1991, I came up here for spring break of all things. Who goes to Chicago for spring break? But came up here for spring break and met with him, talked with him about what he did. But the thing, and you'll hear this from an awful lot of people that are my generation, the thing that really hooked me was when he took me around the floor and explained how everything worked. So the moment that I graduated college, or I shouldn't even say graduated, I didn't go to my college graduation. The moment I finished my coursework, I put everything that I could in a car and moved up to Chicago and got a job working as a runner on the floor of the CME at the time. So the Board of Trade and the CME were separate. Started out in the agricultural space, ended up my stint on the floor working in the Eurodollar options pit, which at the time was by far the largest physical pit, and it's still one of the largest markets out there. So the whole move to Chicago started out with a runner and just started working my way up is how I got started.
Oh, wow. Okay. It's always interesting when we hear all these things because on how everything just correlates and orchestrates itself and joins together to bring you to where you are today, isn't it? There's an intelligent orchestrator orchestrating it behind the scenes. So that was good, right? I mean, after the university, you really wanted to go and start this all off, just all started from your mom's friend. Wasn't it? Yeah, very nice.
Yeah. And then I just one thing that I did figure out was I didn't like being on the floor. Okay. If you hear about, I actually, one of my hobbies is watching things about World War II, old documentaries about World War II, and they talk about how you see all the fighting, but you never really see all that downtime that, you're not fighting every day. There's a lot of downtime. You're waiting to move and those sorts of things. Being on the trading floor, you're actually reacting to orders that come in. And you need to remain somewhat alert. You need to be able to switch from talking about, what the White Sox did last night to suddenly being on the job when orders start to come into the pit, because you really are just reacting to order flow. I did not like that downtime. I felt like I could better be utilizing that time, and I really did figure out that I wanted to do things in more of an analytical capacity. So I did go back to school, got a master's degree in finance, and also did some graduate work in financial engineering so that I could really be more of a systematic upstairs trader, which I think was very timely on my part because the floors just I think we all know this, the floors just aren't what they used to be, and unless you were proactive, it was very difficult to make the transition from floor trading to upstairs trading.
All right. Okay. Interesting. You know, going into your type of style of trading, Russell, would you say you're more like a position trader, a scalp trader, or a swing trader? And do you mainly do intraday trading? What is it like?
I think if I had to check one of those boxes, it would definitely be a swing trader looking for 2 to 5 day moves. Is something that I was doing when I traded futures. I've switched to options, and I know we'll get to that. But when I was trading futures, I was looking at the 3 major financial markets against each other: the currencies, stock index, and the and bond futures. Mostly the 10-year bond futures, and it would be very much of trying to find reversals, which I know matches up well with what you're doing. I had a little bit of a different method of doing this technically, and probably missed some of the early moves, but I could catch really good 2 to 5 day moves using the futures markets.
Okay, 2 to 5 days moves, more of a swing trader. Yeah, it's more or less very similar to what we are doing here as well. Let's go on to the entry side of things, and then
Sure.
at some point we can also share your screen at the end. Tell me if there's a concept. Is there like a concept to all the trade setups that you take?
Yeah, well, first off, any trade that I take now will match. There are a couple of things that need to match up. One is it needs to match up to some of the back testing that I've done that shows when when you've got a slight edge, I believe, within the option market relative to what a price outlook is. The option prices really do just come down to what is a consensus outlook for the overall market, usually over the life of the option, and not necessarily directionally, but at least the magnitude of the moves. And I go looking for where's the situation that the option market is just focusing on pretty much the statistics behind the move, but is not necessarily taking into account the fact that we hit a bottom and didn't make a new low over the next couple of days. The option market does not really react, especially on a short-term basis, to technical signals. And when I find those disconnects, or historically have found those disconnects, that's actually what leads to the trades that I'll do.
Okay, so you would say that the basis is based on a consensus outlook of the whole market.
It's based on historically something different happening than what the option market is pricing in. And I'll give you want me to let me share one thing from a trade I talked about yesterday.
Yeah.
I'll show you a slide, and I know sometimes it's difficult. In fact, I'm not gonna put my slide on the whole screen, but it'll be enough for everyone to see. So right here, this is a trade that I talked about yesterday, and it's actually, I didn't realize it's actually doing fairly well. So yesterday, somebody came, and this was actually a block trade that was executed. It's not one that I did, but it's very similar to something that I might do. And someone came in and noticed that the options expired this coming Friday, when the NASDAQ was working its way higher, but it looked like it was starting to roll over mid-morning. And what they did was they sold the call option that expires. I'm going to get my. I want to make sure people are looking where I'm looking. They sold the 13,640 calls which is that strike price right there. And they purchased the 13,650 calls. And they did this trade when the NASDAQ was right there at that break-even point. And the idea behind this trade, they took in $4.95. They could lose $5.05 per spread. But what this really does is you're you are going against momentum when you do a trade like this, and reversal trades are hard. I think you guys have a really good way of locating them, but if you're on the wrong side of one, you can get blown up pretty quickly, because taking the other side of the trend, it can be very profitable, but it also can be somewhat dangerous. So a spread like this allows you to define your risk and reward. So if the NASDAQ is under 13,640 on the close on Friday, or the NASDAQ 100 is under 13,640 on Friday, they profit by about $5. If it blows through and keeps going higher, we could end up seeing 13,008, 13,009, but the most that can be lost on this trade is that $5.05. So it's basically a 50-50 trade. Now, if I had done some done analysis, and when the NASDAQ was at 13,645, I could see that historically there's probably about a 75% chance that it's going to work lower, and only about a 25% chance that it's going to work higher, but the market is pricing in 50-50, that's a trade.
Okay, got you. Okay.
Okay.
So you look at a few things. I'm sure you will become more clear as you show us more examples as well. So I think you showed us a little bit about your typical trade entry there. I just want to ask, do you scale into your trades, Russell, or no?
I will scale into my trades if things seem to be going in the right direction. I might, like in the trade that I just showed you, the NASDAQ's almost, it's about 80 points lower as we speak right now. I might, if it looks like that an uptrend has been broken and it's going to continue to work its way lower, I would consider doing similar trades with lower strike prices.
Okay, right, got you. Okay.
So,
and yeah, so tell me then, so you say only if it's going the right direction you scale. Okay, that's fine.
Just following along with the trend, kind of.
Okay.
As
Okay.
long
Yeah.
as it's in place.
So would you like wait for retracement before you scale in, or is it like more of a breakout of a certain price that you scale in, or
a retrace? If we're hitting, that again, that trade I just showed, if we kind of bounced off that level, which we did, and started working our way lower, but we got a little bit of a reversal that didn't surpass that level, I would consider adding to the position.
Okay, good.
So not just for purely following it down, but if we get a slight bounce,
got you.
But doesn't violate that level. And again, the option pricing has to be in line in order to really match up to, I would look at the market and then I would look at the option pricing.
Got you.
Which a lot of option traders will do it the other way around. I think you always want to look at the market first.
Okay, got you. Okay, because you're saying that the market leads the pricing eventually.
Well, beyond that, the reason that the trade was done was the underlying market, not, that's the key reason. So that's what you should be keying your potential stops off of or potential exits off of as well, not necessarily what's going on with the option market.
Perfect. The next one is, I want to ask you, so based on entries, I mean, what would you say your best trade to date so far is, and what was your thinking behind your entry?
The best thing that I've done, and it's not a single trade, it's more of a systematic approach, but I figured out that we now have, and this is another reason that I'm more option focused than the futures focused like I was in the past. For the S&P 500, the NASDAQ 100, and the Russell 2000, which are the three markets that I primarily trade, we have options that expire every Monday, Wednesday, and Friday.
Okay.
So if today, I think we've just got a couple of days of a move. I've got options that expire in a couple of days. If something happens on a Friday and I feel like we're going to see maybe follow through to the downside on Monday morning, or we see a reversal on a Friday, and I expect it to continue through to Monday, there are options that expire on the close Monday that I can trade around that outlook. So it's made it very easy to be a swing trader with options in those broad-based markets. I've figured out that the amount of volatility that occurs in the markets midweek is less than the amount of volatility that we usually experience at the beginning of the week and the end of the week. So I've found that options that expire on Wednesdays tend to be overpriced a lot more than options that expire on a Monday or a Friday. And if options are overpriced, that lends itself very well to the type of trade that I just showed you.
Right. Okay. Saying that overpricing, that will come back to its revert, and then you will take
right.
probably a short on it. Is that right?
Yeah. Right. And I've done pretty well putting on what would generally be termed as short volatility trades using Wednesday options and putting those trades on Tuesdays.
Okay. Is there any particular trade that comes to mind that you have done?
Sure. The most recent,
or even in all your trading so far. I mean, is there?
Well, because the risk and reward is completely defined.
Mm-hmm.
It's usually about the same dollar amount every week when I put the trade on. So it's more of a cumulative, about an 80% win percent, about an 80% win with 50-50 payout on a consistent basis is something that I've been doing for a couple of years now. And it even worked fairly well through the high volatility market this time last year.
Oh, right. Okay. Interesting. Moving on to stop losses, I mean, would you say you use stops, Russell? And if you do, then where would you place your stops usually?
Well, I will have a I'll backtrack a little bit on stops. When I purely traded futures, I would get stopped out every once in a while of a position that I wasn't, that reverted right back to the price level before, and of course I could get back in. But and I'll pull this back up once again. Let me. Because I do think this is a good example here. This has a natural stop, that 13.6, that 13.650. If we blow through that price level, I know the worst case scenario here. I can get out better than the maximum loss if I get out early, and let's say the intraday high on yesterday when this trade was put on, let's just hypothetically say it's something like 13,675. Well, if we solidly breach that level and it looks like the reversal failed, I might go ahead and take this trade off. But I'm not, because as you mentioned, I'm a professor at Loyola. I teach Monday, Wednesday, Friday afternoons. I'm actually in the classroom when the markets are closing on Wednesdays, which is when some of my major trades are expiring. Because I know the worst case scenario and I know the best case scenario when I put a trade like this on, I'm not necessarily concerned about the stop part of the equation. But any type of exit that I might do would be based on, again, the underlying market price indicating that I'm on the wrong side of the trade.
Okay, so it's
salvage
more,
something out of the trade.
Yep. Right, got you. So it's more or less already predetermined with the trade that you already enter. Isn't that right? Yeah.
Exactly. Yeah, and that's when I was with Cboe, I traveled a lot, but I traded this way as well, and I didn't have to worry about being on a plane when the market's closing and having spotty internet and trying to trade out of something.
Got you. Okay.
And then the other aspect to all of this is if you're in the option market and you're trading stock options, you do need to be proactive when you get close to expiration if you don't want the option to be exercised or be assigned on a short option position, because you'll end up with a position in the stock. With index options, the worst case scenario is you encountered a maximum loss and they're actually cash settled. So you don't have to worry about trading out or ending up with some other position based on the option position that you had on.
Okay, got you. Okay, so there's a bit of a difference on the index or the stock options. And is there any need to trail stops at all? Do you trail your stops?
No, I really, but just because if things are working out particularly well, I've already, the market has moved far enough away from the strike price of the option contract that I have, that's part of the spread. So even if, even if we get a blip against ourselves over the next 2 or 3 days, but it doesn't really threaten the profitability of the trade, there's no real reason to exit the trade. Once the spread reaches a point where it would only cost maybe 10 or 15 cents to get out of it, I will do that just to go ahead, because it's not worth the extra 10 or 15 cents out of the spread in order to to realize the maximum profit in case we get some sort of surprising reversal in the last moment relative to the spread.
Okay, so basically it's and you've defined your adverse situation to get out. Okay, got you. All right. How do you actually do your risk management? Is it pretty simple? Like it's just 1% of your account capital that you put on, or
it's 5.
oh, it's 5%.
Yeah, it's 5, but I'm doing I'm doing really high conviction trades.
Okay.
But I 5% of my my capital will go to each position. So that's my risk management methodology. Or a 5% is the maximum potential loss. But with a pretty high win percentage and pretty opportunistic way of trading, I don't, I think I'm comfortable with that number, and I know that number is a lot higher than a lot of other people's potential losses.
Russell, just actually one further question on that. I mean, I know some people listening in might just say, oh, 5%, you know what, that's actually quite a lot. But I think there is another way of looking at it as well, which is how many times would you say that, okay, so that is your worst case scenario risk. But if you were to look at your actual loss that you really got from your hundreds of trades that you have done, what would that be? Would it be 1/5 of that? So actually, even though you risk 5%, but your actual loss sometimes is only 1% or 0.5 average.
Well, that trade that I showed you, so let's make it a $5 profit versus a $5 loss to keep the numbers very simple. Which with a 100 multiplier would be $500. If I've got $10,000 in an account, I'm going to do a 1 lot.
Okay.
And the odds of, and I'll get run over every once in a while, and I'm okay with that. I know that a lot of people have a very difficult time dealing with that, but I've traded long enough that I understand there are going to be losses. But I think the longest streak that I've had in losses is 3.
Oh, it's 3. Okay, that's good. Yeah. I think knowing all of that really helps before you go in, because to get your psychology right and to pull through it as well,
And I know how hard that is. I'm well aware of some of the academic work I've done is in the behavioral finance space, and through personal experience, but also just knowing that I don't care what level of trader you are, it's the behavioral part is by far the hardest part.
Okay, yeah, definitely. I mean, we'll definitely go into that very shortly as well. Just tell me a little bit on what would you say is the trade that taught you the biggest lesson? Or would that be such a trade for you?
Yeah, it would, and this is kind of funny because it was a winner.
All right, okay.
This goes back to it was a currency trade, and I had developed a euro currency trading system that actually caught trend changes, and using a relative strength index. Basically, if we went from, and I was using it opposite of the way most people use it. If we go from under 50 to above 50, I would consider that a trend change. And if we drop back down below 50, that would be my stop.
Oh.
So I know, and most people look at the RSI as an overbought, oversold indicator. But when you're between that 20 to 80 range, I think there's a lot of trend information that gets in there. Plus, when people look at a relative streak, the RSI, you'll see that guy sit up there in the 80 to 100 range for weeks at a time sometimes.
Yes.
And if I caught the crossover at 50, I would have been holding through a good portion of that move. Well, I had developed a short-term RSI reversal system, and the maximum profit on a trade, let's just say, would have been maybe $1,000.
Mm-hmm.
The second trade I did with the system made like $7,500 a contract on currency futures. A ridiculous amount of money compared to what it should have done. And the next trade that I did lost about $5,000.
All right. Okay.
I gave like 2/3 of it back, which again was well outside. Well, the system, I made a lot of money, but the system wasn't working the way that it was supposed to on that first trade. Mm-hmm. So what I learned was even if the system is so much better than you would have expected it to be, looking at historical data, there's probably something wrong there. I know we don't think of profits as being a signal that things aren't going well, but that was what I learned from that was if the system's not doing what it's supposed to or what you expect it to, you need to walk away from it and do some more work before, and then come back when you think you figured out what was wrong there.
Yeah, I think you hit the nail right on the head there. I think when it's a winner, we don't usually ask those questions, and we think we're on the right track until we get caught out, by another loser that you give back the profits. And I think at that point, actually, I would say, in my experience, that a sharp trader, when he gets such an outlier profit, should already take that as a warning signal.
Absolutely. So, but yeah, that was fairly early on when I was trading, when I was systematically trading all those markets against each other. And thank goodness that I didn't start it like a week later when I had the big, my starting date had been a week later when I had that giant loss. It would have been a much different performance situation for that year.
Yeah, got you. Going on to targets and all, would you say you have a predefined target for all your trades, or do you exit live on all your trades based on certain parameters?
There's most definitely a predetermined target, and sometimes it will be beyond. I showed a trade where the market was right at where at break even, but there will be certain trades that have targets that are outside of the current trading parameters. So I do expect a move, but the risk on that might be 20% versus an 80% profit. So I showed you that 50-50 trade. Instead, if I get the move that I think may come, and there are certain volatility markets that I trade that way because there's a natural drift in a certain direction. Those types of trades have more of a target to them.
All right. Okay. Got you. So I guess everything that you're doing is already have this quantification parameters. Would you say that you scale out of trades at some points? Some of your trades, would you scale out?
I'll scale out of the option trades if again, if I've got 80 to 90% of the profits already.
Okay.
So I know, and I know that's counter to using moving stops. I most definitely, when I directionally traded futures in the past, would have a moving stop, and typically The moving stop would pretty much be based on a recent, and I'm thinking of short trades today. I think just because all I have on are short trades. But so for a moving stop to the downside, it might be, the most recent 3 or 4 bar high. It definitely would be a price violation of whatever trend I think is in place. But I would have a moving stop that I would put in place that would take half the position off at the first violation. And because you get a lot of head fakes, I would wait and see if it's confirmed over time, and then take the rest of the position off if it's broken the trend that I think's in place.
Okay, good. So you're saying scale out of when you got 4 bar highs, when it's trend violating and all of that. And you said interestingly that most of your trades today are all short. Actually, that's one thing I found interesting in reading your book. Because first of all, on page 15, you clearly laid out the relationship of the VIX indicator and the index for both short and long. Because as you've also indicated in your book that you say that most people, especially me myself, because of how it's been mediatized on Bloomberg and everything, most of the time when in all those big events, like the Black Friday, the crash, and all of that, in Bloomberg, they show you only the shorting capacity of the VIX indicator. And it was interesting that you showed us also the long opportunities from using the VIX. Now, would you be able to would you also say that you're more biased towards short as well using the VIX, or do you also take long trades?
Really, the short trades right now is just a function of what's going on in the overall markets. I'll definitely go in both directions. And the way that I use the corresponding volatility indexes, I look at them as trend confirmation tools, where and this works on so many different time frames, and I'll tell traders, if you're trading anything S&P 500 oriented or anything Euro stocks oriented for that matter, you should definitely be keeping an eye on the VIX for the S&P 500 or the V stocks for the Euro Stocks 50, because they will give you an idea if traders are coming in and paying up for options or not. And when traders are paying up for options in those markets, they are more likely than not buying put options because they're concerned about a move to the downside. So if you see VIX continuing to work its way higher or not going lower while the S&P 500 continues to work its way higher, you definitely you're going to find an inflection point there. And you asked about the best trade. I'm going to search for something real quick that I brought up recently in another class, but probably the best indication that that we ever got from VIX relative to the S&P 500 was when Donald Trump was elected. And what happened when Donald Trump was elected was we do have VIX futures that are open at that time, and and even though the futures are open, the spot index is not. But you can compare the VIX futures to the S&P 500 futures, and when you do that, there will be a kind of a reversal that you sometimes can catch earlier than everybody else. And what I'm going to show you a slightly different example. The day, the night Trump was elected, the next day I was doing a presentation in Milwaukee, and I completely changed the presentation on the train there. Because of what had happened the night before. And I showed up and I said, I'm supposed to talk about this, but I'm going to talk about, let's take a look at what happened last night. And this is a slightly different example of what had happened that night. But the S&P 500 was trading off. At a certain point, VIX stopped going up. And it was similar. This is longer term price action. It's not exactly what happened that night. but it's the same concept. And you can see this is you can see the S&P 500 sells off over to the left, and VIX makes a new high. Well, when you see the S&P 500 make a new low, but you don't see VIX make a new high,
Exactly.
that is a wonderful, wonderful contrary indicator.
So it's a divergent signal almost.
Yeah, it's a great divergent signal, and unfortunately, I just don't have the really cool chart that shows how this worked in the night of the election. But what actually happened was the S&P 500 futures were down about 10%, and they sat at that level because it was a limit that was imposed by the exchanges. And while it was sitting at that level, VIX started to trade off a little bit, and then boom, the S&P 500 just took off to the upside.
Oh, I see. Okay.
And I even was talking to some traders that evening, and I talked to one who timed it perfectly. They said, VIX started coming off. We said, it's not going to be that bad. It's time to just start loading into S&P 500 futures. So that contrary indicator, and actually, I know I stopped sharing. I'm going to go right back to sharing. And if you see something like this, where VIX is trending higher while the S&P 500 is kind of trending higher as well, that is very much an early, and this is a 5-minute chart. This is very much of an early indicator that maybe maybe the S&P 500 is topping out. And their volatility indexes on the Russell 2000 and the NASDAQ as well that have the exact same sort of information.
Russell, I just have a further on question. Actually, as I was reading your book, this question popped up to me. Actually, it's following on from Jack Schwager's book on unknown market visits. I don't know if you've got a copy of it, if you started reading it yet.
I have.
Yeah. I was just early into the book, and I was reading into Peter Brand, and Peter Brand was saying that two things that he learned from his mentor was, before you get into any trade, is first is direction, which is what all of us are looking at. And second is timing. Now, I just wanted to ask a further question on timing as I read your book as well. In terms of wicks, just like the RSI, right? As we have seen as traders, using these indicators, that sometimes to some instruments on a very strong trend, it would just keep above 80 or 70, whatever it is, for many weeks and many months. So just like that on the wicks, in terms of timing, just like how you showed the divergent signal between the SMT and the wicks, where would you get that exact timing to go in?
It would be combined with some other things. And in fact, combining the S&P 500 and VIX like that would not really be a primary factor. It would be more of a confirming factor, where maybe we have a day or two where the S&P 500 is not making a new high, but it's still in somewhat of an uptrend. But at the same time, VIX is acting. It's acting like there's more concern coming into the market, because VIX is really an indication of how much insurance is being purchased by institutions more than anything else. And when they're starting to pay up a little bit more for insurance, even though we're at near market highs, that starts to become concerning with respect to the overall market. And it might, if anything, the confirmation out of VIX would make me more aggressive with a downside trade.
And at what time, though? That is what you're saying, with a combination of other factors, is it? The timing. It's not just the VIX is just a confirmation, but not necessarily when to go in.
Right. It would be more of a higher conviction trade, maybe putting on a trade with options that has a higher payout, but needs more of a move in the direction that I think we're going to move in.
Okay, got it.
But timing is, it really just, it's more of seeing what the market's offering up relative to what has happened in the past.
Okay, got you. Okay. Just on the exit questions. I just wanted one
Mhm.
last one, which I think I actually got it from Market Visits, where one of the traders actually interviewed in relation to Jack Schwager's question. He said that the time when you know that you are comfortable with your trading system is the time when you get out of trades. You don't feel a sense of regret anymore, and you start to feel peace with all your trades.
Yeah.
So based on that, I just want to ask you. I mean, when you exit your trades, do you feel at peace, or sometimes do you have a sense of regret for coming out too early or too late from your trades?
Um, I don't anymore.
Okay.
I used to a lot in both cases, where where I wish I'd gotten out earlier when I knew there was. I mean, I've been through the whole spectrum of emotions around that one. But I read the same thing too. I actually just finished that book about a week ago. So I remember I identified with an awful lot in the Unknown Market Wizards book, uh, as far as the experiences that a lot of people had. And I think I already indicated that uh, I definitely, you know, am at peace when I lose money on trades, because I know that's just part of how things work. I don't incorporate very much discretion into what I do.
Mhm.
I actually, part of my systematic approach is I get what I refer to as mulligan a week, where I can do something that's slightly different than what is systematically being told to me to do. And so today's Wednesday as we speak. If I use that mulligan today, I don't get to use it for the rest of the week.
Interesting.
So I've
Okay.
got it in that way. If I'm really gonna, I have to have a lot of conviction because I'm giving up my one free pass for the week. And I'm trying to think of the last time I used it. It's probably been months. That was how I got myself conditioned to really just follow the system.
It's
Because
very
because
good.
well, I was gonna say, because the times that I wanted to override it, I had to be really, really sure, and I started to learn that, if I was going to override something, it typically was not the right thing to do. And I worked with somebody that had a really smart person that's pretty well known within the industry, but I'm gonna not name him for his own sake because of the story I'm going to tell. But he had a really great systematic approach of weekly trading index options, different from what I do. But there was one point during the week, I believe it was Thursday mornings, where he had to decide whether to go one direction or another, and it seemed like every other week he was choosing the wrong direction.
Hmm.
And I'd hear, "Oh, I have rebalanced at the very worst time." I mean, it was the same. It was almost a recording. Like he had a um, rebalanced wrong button instead of an easy button on his desk, and he just hit that button and always seemed to do that.
Interesting, right? I mean, I think all of us, I mean, we go through that emotional roller coaster until we start to say, you know what, let's not meddle the system anymore.
Mm-hmm.
It's been designed for a reason. We've put all the
Right.
pre-thinking, and as less as possible, just let's meddle with it. I think it's absolutely the same journey that all of us go through. It's good that you pointed
Mm-hmm.
that out. Now, following on from that emotional roller coaster, and now that you feel at peace and all that, so in line with that, would you say you have like a specific, like a pre-trading routine to keep your mind in check and to keep your emotions stable?
Absolutely. I'm constantly updating my models with what's going on in the markets. And every week I will compare what the model said should have happened to the trades that I did,
Hmm.
just to make sure that I'm following things correctly. There's Before every single trade, I double check to make sure that I'm putting the right options on through incorporating the respective volatility indexes into the specific trade setup, and comparing it to what the model says. So I'm kind of checking myself continuously, but also making sure that um, the models are translating to profits in the real world.
Okay,
Because there's and I tell the students that in some of my classes, I can back test the best thing in the world, but due to liquidity, market conditions, everything else, it may be very difficult to translate that to making money in the real world.
Yeah, very true. I think very nice summarized. In terms of mind, on working on your mind for consistent execution so that you don't meddle with the system, maybe not more so now, maybe in the beginning. Did you do any work on your mind? Like,
you mean like getting out on my bike and getting away from the markets? Absolutely.
okay.
Not as much as I should, because the time seems to get away from me in a lot of days. But yeah, there was always in Chicago, there were two ways people dealt with the stress in the markets. You either drank a lot or you exercise like crazy. And I try to move toward the exercise as much as possible. The other thing that I do is the Market Wizard book that you brought up a couple of times. I love those types of books. I love reading about how other people have succeeded in our business. And it's not like it's a bunch of people from the top schools. It's people that have put in the actual work. So one of the things that because I think a lot of people will get involved in trading, get discouraged, and just think that it's impossible. Well, it's not impossible. There are lots of people that have been able to succeed trading the markets. It takes a lot, but it's a lot of work. You don't sit around all Saturday and Sunday and show up Monday morning and start trading again. You work on Saturday and Sunday. And that's another, I'm certain, and I really wish that I had quantified this over my career. I'm almost certain that the amount of hours that I put in on, I try not to work past noon on Saturdays or Sundays, but I'm almost certain that the number of hours that I put in on the weekend translates into a better trading week.
Oh, interesting. Okay, very well said. And I mean, in the market visits, I mean, sometimes they do talk about, or even other trading books, they do talk about. In fact, one of the other person that we interviewed was Steve Ward on high performance trading. Is quite known here for working with traders on psychology. I have seen that quite a few traders do practice like mindfulness or some breathing exercises to calm the mind down and all that. Have you ever looked into any of them?
No, I'll read fiction.
Okay,
That's
right,
what. No, what I do, I most of my interest is nonfiction, but I'll have some sort of fiction book laying around if I need to step away and reset myself. That I will that I'll pick up and move to a different part of the house, or luckily it's starting to turn nice in Chicago, or go back outside, and I'll read something that is completely outside of what I spend most of my time focusing on.
Ah, brilliant.
That's my version of and everybody has their different way to step away from these things.
Good. All right. So I think that's pretty much all that over here. We're just going into the practical side of the section here. Would there be any traits that you want to show us that is probably setting up as of now? And also it'd be also nice, I think, to look at the VIX for this year, actually 2021, and how it's correlating with the S&P move as well. And I think as we are doing that, I think if there's any other questions from the audience, you can all type it into the chat box and we can answer that.
Okay. Oh, wow. I just put, well, on the trade setup side, let me, and of course things are moving around. So can you see my Bloomberg?
Yes.
Okay, just making sure I opened up the correct screen on this. So we've got, we're in this downtrend now, this slight downtrend, but we're retracing some. Looking at maybe selling the 13,620 call. That's the call option that expires on Friday, and purchasing the 1630 that's a trade that I could put on. Now the spread on these options is pretty wide. You could actually probably sell this, and I know it just keeps jumping on me. It's unfortunately the market won't sit still for me. You could probably sell this 13,620 for about $82 and buy the 30 for around 77 and a half, 77. And that would give you really close to probably like a 40% gain, 60% loss type trade if the market continues to work its way higher like it is this morning. But something along those lines. It's very similar to that trade that I showed you before, which is showing a profit right now as well, just because the market had is traded at a little bit lower space. But that's a typical setup. If we were somewhat range bound, I might also think about doing something on the put side, but right now I don't really want. And the put side would be a bullish side of a trade, but that's not something that I really think makes sense in this market right now. As far as VIX, I know there's a way to pull up relative charts, and that's what I would like to do. This is an intraday chart. I mean, VIX has done nothing but with some bounces.
Mm-hmm.
You can see that. I want to really just look at this year. And until recently, let's try this. There we go. Yeah, I mean, it's bounced up a couple of times, but it really has trended mostly down for a good portion of the year, except for a couple of bumps up. It's not really confirming. None of the volatility indexes are indicating that we should be concerned about stocks right now. Now, as I mentioned, that's not the primary thing that I would take into account with respect to a trade. But if VIX were working its way higher, while the market indexes are hovering around these highs but appearing to roll over, I would probably be more aggressive on the option trade that I do.
Okay, got you.
But VIX is telling a different story than what I think the equity markets are telling us right now.
It looks like the S&P is more on the uptrend as of now.
It is right now. The S&P 500. Yeah, and the VIX is kind of confirming that. I
exactly
just switched over to the chart, but that price level right there and the way that we traded yesterday, if we don't bump higher again, if we don't exceed yesterday's high or close above yesterday's high, that might be an okay short setup. Of course, I've got a very short bias right now, but that's something to keep an eye on. The NASDAQ is not as strong as the S&P 500. That's actually, I mean, it's bumping here, but it's not making new highs relative to there. And you can see that the trade that was put on yesterday was done on that. I mean, that's not the most bullish of price action yesterday. You can disagree. I don't mind debating these things at all, but I think when you see something like I meant to put 2021. When you see something like this, that can indicate a reversal. But again, if we close above this level here today, you asked me about maybe exiting a trade before expiration. That might be an indication that bearish spread that I showed before might not be the best trade to be in right now. But we'll see how the day the day plays out.
Okay, yeah. Yeah, interesting that you showed some price action over there, because I think we quantify that to be closing below the mid-range of that bar and showing some weakness. But what we have actually found, Russell, is that, as you've nicely said, I mean, of course, I mean, just taking a trade on just one signal doesn't really give you an edge. When there's a confluence of factors, then it definitely does. Just one question that comes to me, and probably that will be the final question from me, and then we will take it on from the audience. On Bloomberg, they do talk about this Buffett indicator. I don't know if you've heard about it. And he had mentioned, I think this was before March, or was it after March, after the crash happened, that his indicator was showing high volatility. It was in the overbought region. Have you heard anything about that and how that actually correlates with the VIX indicator?
I have not. I know he uses implied volatility for something differently, but I hadn't heard about. Apparently, the last time it did this was before the .com crash. Man, to have that kind of history, and that helps tremendously. But no, I had not. I don't know exactly what that how that indicator works. I'm looking at an article real quick about Elon Musk talking to Cathie Wood, who's the ARC PM. I like how she automatically said that the gauge is likely inaccurate. But I would have to dig more into that indicator to see what he's talking about there.
Yeah, I had asked someone else before about that. I think they were not very sure about it, but I think they do talk a little bit about it in Bloomberg, but they do also say that nobody actually knows the real formula behind it.
He compares the value of the stock market to the size of the economy.
Right. Okay.
And the stock market is the indicator is at 195%. Now, I don't know what that means, but okay. The value of the Wilshire 5000 is 41 trillion, and fourth quarter GDP was 21.5 trillion. So the stock market, the value of the U.S. stock market is almost twice that. That's where that 195% comes from. Now, I wonder if we have to, like everything else, adjust that for COVID and adjust for how the stock market is already discounting an awful lot of, if not all of the recovery.
Yes, exactly.
And GDP is the denominator in that formula is going to catch up. We know that. Apparently that's the indicator. Now you've given me something else to work on this Sunday.
All right. Okay. Yeah. Anyway, so I'll just run that past you. Okay. If there are any other questions, the guys can put it in. Just as they're doing that, Russell, is there a place that people can go to find out more about you? Do you want to share that on your screen so that then they can?
Sure. I mean, I'm adjusting things around once again. I'm much better at navigating a quote screen than navigating
Zoom.
Okay, this. So the firm I work for is EQDerivatives, and get the share screen. So this is the firm that I work for, and anything that I write here. So anything that I write is actually in front of the paywall, and I've got to find. I haven't written anything in like a week, but I will. Let's try this way. Search. So if you go to EQDerivatives, a lot of things are behind the paywall. Anything that I will write tends to be in front of the paywall. But it seems like the things that are really showing up are the things that I there we go. So anything that's EQD research, any of the strategies that I've traded, any of the good trading setups that I've seen as of late, and I do talk about global markets, not just the U.S. markets. as you can see. But any of those things are at EQDerivatives.com/author/Russell. I didn't realize there was a direct link to that. I'll be using that link from here on out. But there, the link right there up at the top is where I'm putting things up. And I'm actually been a little slack this year, but I should be putting up a couple of articles a week starting next week. I'm gonna become a little bit more active on our site. We put up twice weekly videos on a YouTube channel that's relatively new. It's EQDerivatives YouTube channel. And then really whenever I do anything at all, I tend to share it on Twitter. I'm very open about everything that I do. So my Twitter handle is just my full name, @RussellRhoads. So those are the places where I put things out more than anything else. So.
Okay, good. So I've just put that onto the chat box as
well.
Yeah,
just so that. So.
Author Russell.
The one thing I'm really bad at is self-promotion. Right. I just kind of do things, put things out there, and then, so if you can't tell, when you ask the question, how can we find out more about you? I don't have a good answer for that one, because I'm not really good at, like I said, bringing the attention to me. I just do my work, put it out there, and let people judge the way they want.
I guess they got a few places where they can find out more about you, so I think we will leave them to it if they want to just keep up with your news and your info. I guess that's pretty much that from us, Russell. Thanks a lot for your time today.
You bet.
Would there be any final words or anything that you would like to say for traders going forward?
Nah, just trust your system. I should have a giant picture. I not now, but 15 years ago, I should have had a big sign that just said "Trust your system" sitting above my desk, instead of a map of the world.
I think that's a very nice message to finish off with. Trust your system. I really like that. Yeah. Thank you for that, Russell, and thank you everyone for coming to Traders Talk.